Welcome to Get Rich Slowly, the podcast where we unpack smart, steady strategies for building wealth over time. Because rushing into the markets is like sprinting in quicksand. You'll just sink faster. I'm your host, and today we're diving into something that's been buzzing in the investment world, especially with crypto's wild ride showing no signs of slowing down. Our topic, the STCE ETF. If you're curious about dipping your toes into the blockchain universe without diving headfirst into buying actual Bitcoin, this could be a measured way to play it. We'll break down what it is, how it works, its track record, and, most importantly, whether it fits into a slow and steady portfolio. Let's get into it. First off, a quick primer for anyone new to ETFs or exchange-traded funds. Think of them as baskets of stocks you can buy and sell like a single share on the stock exchange. They're popular because they offer diversification. You're not betting the farm on one company, and they're usually low cost. Now, STCE stands for Schwab Crypto Thematic ETF, launched back in October 2022 by Charles Schwab, one of the biggest names in brokerage. It's not a direct crypto fund holding digital coins. Instead, it's themed around the ecosystem that makes crypto possible. The goal? To track the Schwab Crypto Thematic Index, which picks out global companies poised to benefit from the growth of cryptocurrencies, blockchain tech, and distributed ledger systems. What does that mean in practice? The index uses a fancy natural language processing algorithm, basically AI scanning news filings and reports, to score companies on how crypto-relevant they are. It starts with a broad universe of stocks, then ranks them by their exposure to things like mining, exchanges, wallets, or even payment processors that integrate blockchain. The top 50 or so get selected, weighted by market cap, but capped, so no single stock dominates too much. It's equal weighted across regions too, about a third each in the US, Asia Pacific and Europe, to spread out the global flavor. As of late 2025, the fund holds around 43 stocks, with the top 10 making up over 60% of the assets. That concentration can amp up the upside or the downside, which we'll circle back to. So, who's in the basket? Let's name some names to make this tangible. Heavy hitters include MicroStrategy, the business intelligence firm that's basically become a Bitcoin proxy by holding billions in BTC on its balance sheet. It's often the largest holding, around 8 to 10%. Then you've got mining giants like Marathon Digital and Riot Platforms, which run massive server farms to validate blockchain transactions and earn crypto rewards. On the exchange side, Coinbase Global is a staple, as it's the go-to US platform for trading everything from Bitcoin to altcoins. Don't forget payment innovators like Visa and MasterCard, which are dipping into crypto settlements and stable coins. And for that international spice, there's Galaxy Digital, a crypto-focused merchant bank, or even Taiwan Semiconductor, which fabs the chips powering all those mining rigs. It's a mix of pure-play crypto firms and blue-chip names with blockchain side hustles. Think Nvidia for its GPU tech that miners love. No actual crypto holdings here, just equities tied to the theme. That keeps it regulated and accessible in standard brokerage accounts without the wallet headaches. Now, performance, because numbers don't lie, even if crypto sometimes feels like it does. STCE went live in October 2022, right in the depths of the crypto winter after the FTX collapse. Its first year was rough. The fund dropped about 60 to 70%, mirroring Bitcoin's plunge from $30,000 to under $20,000. But fast forward to today, November 2025, and it's a different story. With Bitcoin smashing past $100,000 and flirting with $110,000 amid ETF inflows and regulatory tailwinds, STCE has staged a serious comeback. Year to date through Q3 2025, it's up over 80%. And since inception, it's delivered annualized returns north of 40%, beating the S&P 500's typical 10% long-term average, but with, you guessed it, way more volatility. Over the past 12 months, it's clocked in around 120% gains, fueled by the bull run in majors like MicroStrategy and Coinbase. Dividends? Slim to none. Yields under 1%, since it's growth-focused, not income. But here's the get-rich, slowly spin. Is this a quick buck or a patient play? Crypto's allure is obvious. It's disrupted finance with blockchain promising everything from faster remittances to decentralized apps. The market cap for digital assets hit $3 trillion this year, and analysts project blockchain adoption in supply chains and DeFi could add trillions more by 2030. STCE lets you ride that wave indirectly, which is smarter for most folks than chasing meme coins on Robinhood. Schwab's low expense ratio, 0.30% annually, means you're not bleeding fees like with some active funds charging 1% or more. And it's liquid, trading millions in volume daily, so you can buy or sell without much slippage. That said, let's not sugarcoat the risks, because slow wealth means respecting the downside. Volatility is the big one. STCE's standard deviation is double that of the broader market, meaning 20% swings in a month aren't rare. Remember 2022? Or the flash crashes tied to regulatory news like China's mining bans or SEC crackdowns. Correlation to Bitcoin is high, around 0.8. So when crypto tanks, this ETF follows. Geopolitical stuff adds spice too. Asia holdings expose you to regulatory whims in places like South Korea or India, and liquidity in some smaller holdings, not always stellar. Plus, the thematic focus means if blockchain hype cools, say quantum computing threatens encryption, poof, relevance fades. It's not set it and forget it like a total stock market ETF. So, how might you weave STCE into a portfolio without turning it into a casino? Think allocation, not all in. For a diversified investor in their 30s or 40s, 5 to 10% exposure could juice returns without wrecking sleep. Pair it with broad index funds, say 60% stocks, 30% bonds, 10% alternatives like this. Rebalance annually. If STCE doubles, trim some profits into safer spots. Dollar cost average in buy fixed amounts monthly to smooth out the bumps. And time horizon matters. This shines over 5 to 10 years, betting on crypto's maturation, not overnight riches. If you're risk averse or nearing retirement, skip it. Stick to plain vanilla growth. Alternatives. If STCE feels too thematic, check out Beto for direct Bitcoin futures exposure. Though it's more volatile and tax inefficient, or BLOK, the Amplified Blockchain ETF, which is broader but overlaps a lot. For pure stocks, just buy Coinbase or MicroStrategy outright, but that's less diversified. STCE strikes a balance. Crypto flavor, without the keys to the vault. Wrapping this up, STCE isn't a magic ticket to Lambos, but in a world where tech evolves faster than regulations, it's a thoughtful way to bet on blockchain's future. Done right, with small stakes, long views, and no FOMO, it aligns with getting rich slowly, capturing upside while the herd chases highs. Do your due diligence, maybe chat with a fiduciary advisor, and remember, past performance is no crystal ball. If this sparked ideas, drop a comment below. What's your take on crypto ETFs? Subscribe for more measured money talks, and we'll catch you next time on Get Rich Slowly. Stay patient out there.